Valentijn van Nieuwenhuijzen is the CIO of NN Investment Partners. Great to see you, Valentijn. At the time when everyone's talking about ESG, it seems, when we've reached a pivot point, we're past the pivot point at the tipping point. What's your perspective on all this at the moment?
Well, first of all, thanks a lot for having me here today. And I couldn't agree more that there was another pivot, I would say, because, of course, this is not a new theme. It's been a theme that has been building at least quite broadly for the last 3 years, almost globally. And before that, certainly in Northern Europe, for the last 5 to maybe 10 years even. But what I do see clearly on the back of the recent COVID-19 crisis is that this is one of the areas where probably we pivot into an acceleration of the theme. And I think this links back a lot and most directly to the large societal impact of this crisis. And thinking about society in a broader sense, of course, is very central to a responsible way of investing and integrating ESG factors in your approach. And we're now experiencing to such an extreme extent how these social values of caring for, let's say, the weaker in our society, of caring about certain let's say, external factors of our economic model that are impacting parts of our society, our ecology, and our sort of future resistance or future ability to digest shocks. And therefore, I think that on the back of this broad experience in society, the trends that we're already building with policymakers in broad society, certainly also with investors, will sharply accelerate on the back of this crisis. And so it will be a substantial pivot, which I do think you already see some concrete trends emerging. But it's early days, of course, given that we're only 2 months into this crisis.
So there's a lot of talk about resilience in some regards, but portfolio resilience, societal resilience. But we're in a short-term crisis, but we have to think long-term at the same time. We have to invest long-term. How do you reconcile those two competing ideas?
Yeah, I think that's going to be one of the most interesting questions, also for people in the industry or in our societies that already been very engaged with whether it's climate change themes or broader societal or ESG themes. Because obviously there's a certain aspect of short-termism, maybe purely focused on financial results. Maybe you can capture it by sort of financial greed, which doesn't really connect well with successful resilience against shocks, which doesn't connect well to really having a strategic vision in the long run. And we strongly believe that these two components really add to sort of the persistency in financial results and also thereby the persistency in investment results. However, as we learn now, I think another part, what you could still capture maybe or box into a bit more short-term oriented, is that it is critically important to be able to adapt to these types of shocks. And therefore pivoting your way of thinking, your business model, your style of investing to some extent, if these types of unexpected shocks occur, is actually a characteristic that is even more important than maybe it was before we were living through this crisis. So yes, you have to have a long-term vision and a long-term strategy. Don't focus too much on only short-term financial results. But I do think the nuance is that in the short run, also you have to be able to adapt. And of course, as Darwin already taught us, in the end, it's the most adaptable that will survive. And I think that holds very much also around this theme.
Yes. So what's the message to clients in this context for you?
Well, I think first and foremost, it is important for clients to give full transparency and insight on what is happening. And that was sort of also our first priority around this crisis, independent of the lessons learned and what are the longer term consequences. First and foremost, try to put some perspective, create some visibility on what is happening, and be very transparent on how we are dealing with it. Having an adaptable investment style is something that we have already developed over the last 3-4 years in our organization, and showcasing how we are applying that to safeguard our clients' portfolios during this crisis was critical. And it was very good that it was basically, a follow-up of our investment principles and beliefs already. And then secondly, indeed, I think it is important to educate on our thinking for the long term, and to identify the opportunities that this will also create for clients. And I think in this whole sort of dialogue, it is of course very helpful to see how strongly a lot of ESG or sustainable strategies have been performing throughout the last 2 months. And this is an industry-wide phenomenon. And at NIP, we're also lucky to see very good results of our own strategies. But I think maybe more importantly, even for the whole industry, that you see this very broad-based. So I think that a key message for clients also to bring as this is one other proof point that actually being more responsible or being more sustainable in your investment style does not come at a cost. You don't have to pay or give up investment returns to steer your portfolio in a more sustainable manner. Actually, clients will more and more start to seek for adding sustainable alpha to their portfolios. So there actually benefit also from the financial perspective. And I think that is this proof point throughout this crisis really helps to convince maybe the doubters in that area.
If stepping back a little, what does the investment industry learn from this? What does it look like after the pandemic?
Yeah, that's going to be very interesting. I think it's going to be an acceleration around the theme of thinking more broadly than financial results alone. We are very much trained and basically have learned to think about the financial results as our core and main objective. And I think that we will get multiple objectives around the impact that we have on society, the contribution that we have to a transformation of the economy to a sustainable model. And there will be more and more questions, and this is you see it accelerating almost day by day, to put tangible promises, tangible numbers on these types of impacts. Whether it's carbon footprint, whether it's waste, whether it's water. Whether it is your role in reducing inequality. And I think these elements will be increasingly important. They will change the industry, I think, quite phenomenally and quite broadly. Secondly, of course, what you see happening now is next to what I spoke about in terms of the impressive investment results, is that the industry is already on the move. If you look at the flow dynamics since early 2019, if you look at the equity space, more than $200 billion have flown into these type of strategies, growth of close to 20%, compared to a broad market decline of close to 5% in equity space. So clearly investors are putting their money to work, and the asset management industry will have to accommodate that and find fitting solutions for more and more capital that is looking for a sustainable destination. So being also adaptable to that and tailoring the solutions to the specific client needs, because around this theme, there will be more need of special tailoring to what clients are aspiring, because that is still very divergent amongst the client base in the industry.
Valentijn, thank you so much for your thoughts today. Really appreciate it. Thank you.
Thanks a lot for having me, and good luck with the program.
Thank you.